Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Asian shares are mostly higher after Wall Street's rally loses steam, a trend we're watching closely at Trega. We're seeing some mixed results from major markets in Asia, with Japan's Nikkei 225 recovering from earlier losses and adding 0.3% to reach 45,768.68. But what drove this recovery? Minutes from the Bank of Japan's July meeting revealed that policy officials are inclined to raise interest rates if economic activity and prices improve. Now, let's take a look at China's markets. Hong Kong's Hang Seng Index edged up nearly 0.2% to 26,542.37, while the Shanghai Composite Index also gained ground, lifted by gains in technology shares. This suggests that investors are starting to shift their focus towards tech-heavy stocks. But not everyone is celebrating. South Korea's Kospi Index slipped less than 0.1%, and concerns about competitiveness lingered after the U.S. cut auto tariffs on EU imports to 15%. Korean vehicles, however, remain at 25%. This highlights the ongoing challenges that South Korea faces in terms of trade and competition. In Australia, the S&P ASX 200 rose more than 0.1% to 8,775, while India's BSE Sensex fell 0.5%. And what about Taiwan? The TAIEX seesawed between gains and losses and closed 0.4% lower. This mixed performance is likely due to a combination of factors, including global economic trends and trade policies. Now, let's take a step back and look at the bigger picture. U.S. stock indexes drifted lower on Wednesday, with worries reviving over high levels of share prices. The S&P 500 slipped 0.3% to reach 6,637.97 for the second straight day, while the Dow Jones Industrial Average dropped 171 points, or 0.4%, to 46,121.28. The U.S. stock market has slowed after a blistering run since hitting a low in April. Gains have been fueled by hopes that President Trump's tariffs won't derail global trade and that the Federal Reserve will cut interest rates several times to boost the U.S. economy. But with this rally losing steam, investors are starting to worry about stock prices shooting too high and becoming too expensive. We're seeing examples of this at Trega right now. Micron Technology's stock fell 2.8% despite reporting a better profit and revenue for the latest quarter than analysts expected. This is a stark contrast to the typical reaction we see when companies beat earnings expectations, where stocks tend to soar. And then there are the winners on Wall Street. Lithium Americas soared 95.8% following reports that the U.S. government is considering taking an ownership stake in the Canadian company, which is developing a lithium project with General Motors. This news sent shockwaves through the market and highlights the ongoing importance of clean energy and battery production. In conclusion, Asian shares are mostly higher after Wall Street's rally loses steam, but this trend is likely to be short-lived if investors start to worry about overvalued stocks. At Trega, we'll continue to monitor these developments closely and provide you with updates as more information becomes available.